Welcome back. Let's take a look at some of the price volume buzzers as well. Deltacom has seen a breakout from the 7-session consolidation, so we are watching out for that. Hindustan Copper has hit the 11-year high on an intraday basis, and the volumes too are on the higher side, almost 2x the 20-day average that we have seen. Nestle has been one stock which has been breaking out, but you also have LTTS, which is actually seeing quite a bit of decline. It's formed a bearish engulfing candlestick pattern, has snapped the 7-week gaining streak, and it's in a bit of a reversal mode from the overbought zone, and that seems to be the case for a lot of IT names today, because if you look at the index, that's coming under pressure, and this is coming just ahead of the Accenture numbers. Remember, Accenture will come out with its earnings maybe between 4 to 5 p.m. today. The expectations are that on a year-on-year basis, there might be a growth of around 1–1.5% when it comes to the EPS and revenue. We are working with a growth of 1.6% on a year-on-year basis for the EPS estimate, while the revenue is expected to jump up by 3% on a year-on-year basis. Overall, the company's revenue guidance for the year is 2 to 5%. There are parts of the street which is expecting that the upper end of this guidance might be trimmed a bit, while if you look at the overall operating margins, they are expected to be between 14.8 to 15%. So that's on Accenture that we're talking about. Last quarter, the company had managed to beat the expectation, post which we saw a bit of a rise on that stock. But let's see what they deliver today. Gurmeet, what's your sense as to what should be the trade on IT right now? Just stay away or start building up positions?
It's a tough call, actually. I think there was valuation comfort till about 2 weeks back. There's been, I think, Nifty IT index is already up more than 10% in less than 3 weeks. Some large cap IT names still have valuation comfort, so I think the quarter might still be soft. What I'll be more interested in seeing the commentary from management. So Infosys in particular has been more conservative, in terms of upfronting the, let's say the bad news. We like to see how the commentary changes around AI deals now. And I think the bigger probably impact will come once the Fed officially starts cutting rate, right? I think there was a pivot, and I think they're already talking of 3 rate cuts. So my sense is I would like to wait it out for the commentary as far as large cap IT is concerned. If you see, for example, companies even in large cap like HCL Tech, which have a fairly balanced portfolio between discretionary, non-discretionary tech spending. One of the larger ERD plays, software business, it's actually done quite well. It's almost at 1500 kind of levels. Tech Mahindra, Infy, and Wipro is where it's still a bit of a laggard. TCS obviously has posted flattish number, decent set of numbers, and that also has been around 38, 39. It hasn't corrected much. So I would like to watch for the commentary. Midcap IT valuations are quite stretched. You look at you want to look at Happiest Mind, you want to look at Persistent. I'm talking of some of the better ones. So if you have a 3–6 month staggered approach in IT, I think it still makes sense from a risk reward perspective. Maybe some allocation now and some allocation post commentary.
Gurmeet, have you been tracking the IPL auctions or no?
Yeah, I've been getting alerts, and I'm happy because I have unlisted shares of CSK as a disclosure.
No wonder. Anish and I were just talking about in the markets, we freak out if stocks get the valuation becomes uncomfortable, but no PE applies to IPL auctions. But, that aside, for the market per se, where are you getting uncomfortable now on valuations?
Yeah, so, some pockets in small cap and micro cap space, the kind of oversubscription in some of the IPOs. Too many IPOs hitting the street now. I think this week itself you have almost a dozen. And few pockets in defense and companies where stocks are just running up on order book. A lot of the orders have very long gestation periods. We have seen in the past 2003 to 7 how if commodity cycle turns, interest rate turns, how the impact it has on margins and working capital. So I think the execution ability for a lot of companies is still in in an uncharted territory in my view. So be careful. I think there are good names there. So if you see, for example, a Siemens, which is now demerging the energy business, and L&T, they have 12–13% EBITDA margin. But if you go down, level 2, some of the mid-tier names, you got to be a little careful. I'm not saying all names are bad. And I'm getting a little, I think slightly on the NBFCs front. I think RBI is tightening the. They're a little worried on the unsecured lending, especially small tickets. So they've increased risk weight. I expect more regulatory interventions going forward, which can in the near term put pressure both on the CET1 as well as some bit on the return ratios as well.
Sure, point taken. But the other stock which is coming under a bit of pressure is Zee Entertainment. That has been actually fairly volatile today. It's recovered from the day's low, but still languishes with a cut of around 3%. The latest statement coming in from Sony that they haven't decided about the extension yet, and they're waiting by to hear latest proposal from Zee. In fact, we spoke with Karan Taurani on the matter as to what one should expect for this deal going forward and what one should do with the stock. Listen into his recommendation.
What we believe is that Sony is not willing to go for a further extension herein. I think that is primarily to do with the negotiations and the terms of the deal, because we believe that there could be some kind of change in terms, because of Mr. Puneet wanting to be the CEO probably, and Sony not agreeing about the same because of the ongoing investigation of him. So I think the extension is primarily basis that. So we believe that over the next 2 days we'll get clarity in terms of where that is heading. Otherwise, I think if the extension is sought for, we believe the extension could be for another 3 to 4 months, and that would primarily be for the regulatory approvals, which is from the MIB side, maybe a fresh approval with the ROC side for the new CEO, some kind of shareholder approval for the new CEO. In terms of stock price, definitely 170, 180 levels, it was a compelling buy. Even right now, we believe that investors, should hold on to their positions, because again, we do believe that there's a very high likelihood of this merger going through. We don't see, Mr. Puneet kind of, jeopardizing the position of the shareholders in the company, and we believe a positive outcome will emerge out of this. But fresh additions, I think, it's slightly risky at this point of time, just in case, something doesn't work out in their favor.
Yeah, that's the take coming in on the Zee Sony merger. Still a work in progress, it seems. For the market, by the way, we're nicely perking up. We're holding at that 21,500 plus level, in fact, on the futures. With the Nifty spot as well, it was a bit of a hit and go. And then from there, we've receded just that tad bit. Metals, clearly, that seems to be the theme which has been playing out well of late. And today, too, you've got a Hindustan Copper perking up nicely. In fact, I just want to bring up the last... 1 week chart if you can, for the likes of a Tata Steel, for a Vedanta, which of course, announced a dividend just as of last evening. The Nifty metal alone has surged a comeback of nearly 5% odd. Gurmeet, seems a little foolish to ask, but any contra bets other than IT that you have a view on that one can take in this market?
I think the another very beaten down space is this agrochemical space. My personal view is that the sowing has been pretty good after a good crop. If you see the two-wheeler sales, I think, and some of the farm equipment sales, it tells you that there's some pickup in the rural economy. As we approach general elections next year, we will also have an interim budget. I expect more money spending on rural infrastructure. So whether it's related to the irrigation, the Gati, the Jal Shakti program of the government, as well as on fertilizers, etc. There was some negative news on PI Industries as well. It corrected almost 10-15% from the high. I think the capacity is only going to come in 2025, and you need to have a lot of efficiencies and processes in place. It's just not that the patent gets over and suddenly somebody can just take the market share away. So that's one pocket I like. So like something like a Tata Chemical, for example, trades at like 13-14 times. Nice combination of agrochemical, soda ash, as well as specialty chemical, good management. PI we already discussed. So that's another pocket I like. And, slightly also contrarian view on some of the within, as I said, NBFCs housing finance. I think there's some pull down across the theme after the post RBI action. But I think HFCs, there's a secular, housing upcycle we are seeing, and that's going to last for probably a much longer period of time.
Taken, but time now to bring you an ET Now exclusive. We learned from reliable sources that Aether Industries is entering partnership with a marquee name, and this one is something that you don't want to miss out. Lisa, who exactly is this marquee name?
Yes, so this morning Aether Industries, they have announced that announced a strategic partnership with a global lithium-ion battery producer, and they will be entering into the electrolyte additive space. Now, what we are gathering from our sources is that Aether Industry has entered into partnership with none other than the global EV manufacturer Tesla. And this strategic partnership is for the supply of electrolyte additive partnership, and it will be exclusively an exclusive tie-up with Tesla. Now, what are the sources gathering is that Aether's revenue is likely to see an upward trend due to this contract in the new segment, and Aether is also currently commercializing a new one molecule and more likely to follow. They are in discussions with 3 more molecules. Aether has already developed and developing products like vanillin carbonate, fluoroethylene carbonate, as well as propane, which are these are electrolyte additives. So yes, Aether will be exclusive manufacturer for Tesla for all the additives that they need. We tried connecting with the management, but for now they said that they will not be able to comment on anything at this moment. So that's on Aether Industries.
Yeah, that's quite interesting. The stock of late has been fairly volatile on account of that entire news flow of the accident that happened at one of the units. But if they have tied up with Tesla, that will be a great news, because we've all been, reading those headlines how Tesla has been trying to increase their supply chain from India and expand their presence. And this could be just one of those partnerships. So let's see how the street reacts to this one and if we get any confirmation on that story or not. But let's also bring on board my colleague Sharad. He's been working his phones to understand what the dealing room chatter has been like. Sharad, which is the stock which is on dealers' radar today?
In focus is Nuvoco Vistas, and what we are hearing from the dealers is that the select buying coming in from a domestic institution and a clutch of HNI investors. When we're looking at the volume of the stock, that has picked up almost 18 times its 20-day average, and interestingly the stock is coming up near its 3-month high levels. Now the DIs which are already invested in the company as per the September shareholding pattern, the bigger names include SBI Mutual Fund as well as ICICI Pru Mutual Fund. Now of course the buzz especially in the mid-cap cement space is of course they're coming in because of the consolidation coming in the cement industry, and going ahead also it's expected that the larger cement players will be looking for acquisitions as well.
Right, okay, we'll leave it at that, Sharad. That's the buzz on Nuvoco Vistas. The stock, of course, has cooled off from the top of the day. Gurmeet, just wanted to get your sense in on what's the market view now on PSUs. They've given fabulous returns throughout the year, and I'm sure will continue to do so in pockets. But the recent spate with what happened with the sugar and the entire ethanol story, does that leave somewhere a doubt, a grey zone, or a sour taste?
I think government would be a seller, especially if you see 2-3 years back, the entire market cap of PSUs was, $100 billion, excluding PSU banks. And since then, it's been almost like 3.5 times jump to market cap. I think so that overhang will always remain. And that's actually happening with most private names as well. We're seeing a lot of PE and promoter exits at high valuations. But I think the entire space has run up. I think one mistake which happens in a bull market is that X has run up, so Y should follow. And I think when you start giving that hypothesis, you are entering into a zone where accidents can happen. And again, that should be avoided. I've seen so many guys saying, since HL has run up, the others run up, so should the other defense stocks should also do. I think that should be avoided. I still find some value in PSU banks. I think that space hasn't done as well with the kind of, there's a change in the way credit underwriting is done. I've not seen a 0.7, 0.8% NPA in Bank of Baroda for a long time, 10,000 crore plus kind of an NI growth, good fee income as well. Very good adequate provisioning, guiding for like 15-16% credit growth, and maintaining NIMs at about 3.2, 3.3%. So some of the large PSU banks like SBI, Bank of Baroda, Bank of Baroda trade at 6 times earnings, 1 time book. SBI has 9 time earnings, 1.1, 1.2 times books. I think there's some comfort there. I would not like to go level 2. And selectively in some PSUs, especially in railway, where we are seeing, let's say the current order book to sales is like 10 times. So there's decent visibility with Vande Bharat launches, with more wagons getting added, and backward integration on mobility as well. So there's some value pockets there. But in general, I think the space looks a little expensive to me.
Expensive than of course what it was before, but just need to make sure whether it's just a complete re-rating of the sector that we have seen and there are more legs to go for this one or not. But we've also been talking about Shankara Buildcon, which has actually taken a bit of a restructuring. Today of course we have a call at 4 p.m. which will be tracking in terms of what are the details come out, but that stock is one stock which is doing okay. And then you have names like Century Ply, Keynes Technology. Kunal, what's your view on some of these names? Shankara Buildcon, Century Ply, Keynes Technology?
So out of them, Greenply is something which I do track, and I think the stock is up 14.5% so far. That's something which has come out of a major consolidation. So I think the last time the stock was almost at this 240 plus levels was, I think, in 2018 November, September, November 2018. From there, the stock has now confirmed, seems like confirming a breakout for itself. Ideally, these kind of stocks, they generally tend to give a single day price action, and then for the next couple of days we see a mild correction to these names. And if the stock in the next couple of days doesn't see any major correction or retracement, I think we would probably call this as a breakout move for Greenply and such other names. So I think from the pack, this is the one which I do track and looks attractive.
Okay, point taken. So that's the name that Kunal is suggesting for now. Greenply is the name on his radar. But separately, you have a lot of these other buzzers as well in the trading session. On the downside, it is Gujarat Ambuja, JSW Infrastructure, HPL Power, Siemens. These are some of the names which are in the red. But on the gaining side, GE Shipping, BEML, RT Drugs, these are some of the names which are actually standing out. Gurmeet, just to build on to the question that even Aisha was asking, it's getting more and more difficult for people to perhaps deploy money. There are reports talking about how a lot of these funds and PMS managers have stopped taking money as well. Do you also feel that constraint right now, a lack of opportunity in the broader market?
I would selectively agree. As I said, mid and small caps in particular, yeah. So is it to me? Sorry.
Read your point.
Yeah. I'm seeing there is some lack of opportunities in small mid cap, clearly, and so I think more balanced approach is needed. I made this point 2 months back also. Today, you see the 10-year bond in India, it's gone down from 730 to 715 since the Fed pivoted. You will see multiple rate cuts next year. The Fed is indicating 3 rate cuts, which means the bond yields will come off anywhere between 50 to 100 basis points. Which means if you buy a bond today at, let's say, 715, 720, and you take like a 50, 100 bips drop, you will make a mark-to-market gain between 5 to 6% with 7% running yield. So that's like a good double-digit return on let's say a good bond, GSEC portfolio, which is relatively, I would say not risk-free but very low risk, right? So be a little more balanced. But there's a lot of value still in large cap names, and a lot of them, for example, look at the largest private bank is still available 15 times. Large IT packs still reasonable. The likes of HUL, etc. haven't done well at all. Kotak hasn't moved. Half of the Nifty, in my view, is still at about 17,000 Nifty levels.
I just want to bring up the intraday graph of Aether because that's reacting to the ET9 exclusive that we just highlighted. And what we're understanding from our sources is that they've entered into a partnership with global EV manufacturer, none other than Tesla. Look at the big spike up that you're seeing on that stock, 1.6% higher. And just for the benefit of our viewers who are tuning in, we're understanding that they've entered into a partnership with Tesla. Aether, remember, announced a strategic agreement with global lithium-ion battery producer, entry in the electrolyte additives space. And it seems that this strategic agreement between them and Tesla is currently on the way, and Aether's revenue is likely to see an upward trend because of this contract in the new segment. They're currently commercializing one molecule, another one is likely to follow. And when Gurmeet, when one talks about energy transition, and it's in its pure basic, how we understood it first phase, EVs, the entire supply chain as well comes into focus. I mean, case in point being Aether now. Any interesting plays here?
So we are very, very constructive on energy. So look at, for example, there was news on sugar, constraint on sugar syrup and juice being used for ethanol, and we saw Praj dropping. A very good clean energy play. One of the, we call it a bioenergy engineering play. You got an opportunity there. India is going to add almost 60-70 gigawatts of capacity every year. If you see, for example, there's already tenders of 50 gigawatts for thermal, coal-based thermal alone. And that's why BHEL has around, NTPC alone plans to add around 12 gigawatt next year on coal-based thermal plants. So look, imagine the demand it will have for transformers, insulators, cables and wires. So I think it's a very, very strong secular trend, and I think this should be played. There are opportunities in the EV side. See the run-up in Tata Power after languishing at about 200, 220 levels for a long period of time. So starting from generation, to the entire ecosystem, including transformers, cables, etc. We are extremely bullish. I'm extremely bullish on even on the traditional energy. I think because of this ESG bandwagon, a lot of that got ignored. Just look at the way Coal India, NTPCs of the world have gone up in last few times. There was so much valuation comfort there. So we are taking it as the entire energy basket. We are not really differentiating between renewable and let's say non-clean or whichever terms these days you call them to be.
So that's about the entire power transition theme. We're just winding down to the trading session. 3 minutes left. So let me take it across to Naresh to ask his view about some of the big buzzers. Orient Electric is higher by 8%. Nuvoco Vistas, as Sharad was pointing out, is seeing good amount of price volume action. And then Aarti Drugs as well. Anything that pops up on your radar, Naresh? Mute yourself.
Nuvoco Vista pops out on the screen because a lot of names have really done well. The stock has been sideways. It has made multiple bottoms around 330. Similarly, multiple tops around 385 to 390 over the last almost 8 to 12 months. So sustaining about 385 would be a breakout, which could take it to 450, 470 levels. So, and today there was a big block deal as well. So it looks pretty interesting at current levels. The risk reward is very interesting. A stop below 365 and an upside towards 450 is possible.
Okay, point taken. Let's take the BTSC trades as well. Naresh, complete your point and tell us what are your BTSC trades?
Voltas stop loss at 890, target price of 920. Second is a buy on Federal Bank, which continues to be in momentum. Stop loss at 157, target price of 165.
Voltas, Federal Bank, these are the top recommendations as BTSC trades from Naresh. Kunal, what about you?
JSW Steel is something which I'd recommend. I think at 855, where the stock is trading right now, would look out for targets of 900, stop loss at 835, and even I have Voltas as a buy. The stock looks attractive for a target of 980, stop loss at 875.
Okay, so that's the take coming in. JSW Steel, Voltas, these are some of the names that our charters are liking. On that note, Gurmeet, Naresh, Kunal, we let you go. Thanks so much for making time and speaking with us.